10-day trading strategies for beginners. 1. Information is power. Notwithstanding information on day trading strategies, informal investors need to keep up on the most recent financial exchange news and occasions that influence stocks. This can incorporate the Federal Reserve System's loan fee plans, proactive factor declarations, and other monetary, business, and monetary news. Thus, get your work done. Make a list of things to get of stocks you might want to trade. Keep yourself informed about the chose organizations, their stocks, and general business sectors. Examine business news and bookmark dependable internet-based media sources. 2. Put away funds. Survey and focus on how much capital you're willing to gamble on each trade. Numerous effective informal investors risk under 1% to 2% of their records per trade. Assuming you have a $40,000 trading account and will risk 0.5% of your capital on each trade, your most extreme misfortune per trade is $200. 0.5% x $40,000. Reserve an excess measure of assets you can trade with and are ready to lose. 3. Put away opportunity. Day trading calls for your investment and consideration. You'll have to surrender the greater part of your day, truth be told. Try not to think about it assuming you have restricted extra time. Day trading requires a trader to follow the business sectors and spot potential open doors that can emerge whenever during trading hours. Staying alert and moving rapidly are vital. 4. Begin small. As a novice, center around a limit of 1 to 2 stocks during a meeting. Following and finding amazing open doors is more straightforward with only a couple of stocks. As of late, it has become progressively normal to trade fragmentary offers. That allows you to determine more modest dollar sums that you wish to contribute. That's what this intends, assuming Amazon shares are trading at $3,400. Many specialists will currently allow you to buy a partial offer for a sum that can be just about as low as $25, or under 1% of a full Amazon share. 5. Stay away from penny stocks. You're most likely searching at arrangements and low costs, however, avoid penny stocks. These stocks are frequently illiquid and the possibilities striking it rich with them are frequently hopeless. Many stocks trading under $5 an offer become delisted from significant stock trades and are just tradable over the counter, OTC. Except if you see a genuine open door and have done your examination, avoid these. 6. Time those trades. Many orders set by financial backers and traders start to execute when the business sectors open toward the beginning of the day, which adds to cost instability. A carefully prepared player might have the option to perceive designs at the open and time requests to create gains. For novices, however, perusing the market without taking any actions for the initial 15 to 20 minutes might be better. The center hours are typically less unpredictable. Then, at that point, development starts to get again toward the end chime. However, the times of heavy traffic offer open doors. It's more secure for fledglings to keep away from them from the get-go. 7. Cut misfortunes with breaking point requests. Choose what kind of orders you'll use to enter and leave trades. Will you use market requests or breaking point orders? A market request is executed at the best cost accessible at that point. With no cost ensure. It's valuable when you simply need access or out of the market and couldn't care less about getting filled at a particular cost. 8. Be sensible about benefits. A technique doesn't have to succeed constantly to be productive. Numerous fruitful traders may just create gains on half to 60% of their trades. Notwithstanding, they make more on their champs than they lose on their failures. Ensure the monetary gamble on each trade is restricted to a particular level of your record and that passage and leave techniques are plainly characterized. 9. Remain cool. There are times when the financial exchange tests your nerves. As an informal investor, you really want to figure out how to keep voracity, trust, and dread under control. Choices ought to be administered by rationale and not feeling. 10. Stay on track. Effective traders need to move quick, yet they don't need to think quick. Why? Since they've fostered a trading procedure ahead of time, alongside the discipline to adhere to it. It is essential to follow your recipe intently instead of attempt to pursue benefits. Try not to allow your feelings to outdo you and make you leave your methodology. Remember a mantra of informal investors: plan your endlessly, trade your arrangement. Thank you for watching this video. Don't forget to like, comment, and subscribe. See you on the next video.